What's up, everybody? Welcome back to Trading Wars. Thanks for joining me today. I hope you're having a wonderful day. Today, I'm going to change it up a little bit and I'm going to be focusing on stocks. As you guys know, I trade SPY every single day as well as stocks. And I feel like I haven't talked enough about stocks, and I know a lot of you do trade them. So today's class/seminar is going to be focusing on my process. And if you're ready, let's step into the war zone. All right. Before we start, who do we have in the building? Let me shout you out. Silk Heaven Trading Wars Army in the building. Chris, what's going on, brother? Ramon Trading Wars Army. Bad Indie Trading Wars Army. AV Trading Wars Army. Who else do we have? STK Trading Wars Army. Good to see you guys. All right. So, anybody else? Test Games, what's going on? Kevin, what's going on? Cry, what's going on? Good to see you guys. Chadrick, what's going on, brother? All right. Okay. So let's get into the lesson. So essentially, I have a daily process. Okay. So that daily process I use for SPY and for stocks. My stock trading has a lot of automation inside of it. And that's going to take me to the first strategy that I use, which is basically nightly triggers. Okay. So, what is a trigger? So, the best way for me to show you how to use a trigger or what a trigger is to go to my Twitter. So, every single day I post 4 to 8 different stock picks, sometimes more. And each one of these picks I've hand selected, right? This is my free Twitter. I hand selected the stocks that I think can have a chance to make a move, and I have triggers for them. So let's look at Tesla. So I'm going to go look at Tesla, which was one of our recent really good picks, where we had this inside bar and it showed up on my scanners. Tesla, big name, lots of volume, tight consolidation, looking for a breakout the next day. And I have the chart right here so I can walk you through. Okay. So Tesla, my puts entry was 732.41 and my long entry was 760.92. So I'll go ahead and draw that. So let me draw the long trigger and the short trigger so you could see 760.92. Okay. And I will just make this in green. And now you can clearly see. Okay. So the green line is where we want to go long when it breaks above there. And the red line is where we want to go short. So what I normally do with these orders is I put them in the broker the night before. Okay. So I put them in the night before and I use stop limit orders. So this is for shares. So there is a way to do this with options. It's a little bit more dangerous because sometimes your broker will give you slippage. So let's focus on the shares for now. Okay. So that is Tesla. And what you do is when you set it up, you're telling the broker if it breaks below the red line, I want to go short. If it breaks above the green line, I want to go long. If it doesn't do any of that, then I'm not interested. So let's watch the Tesla price action. So we go ahead, we opened in the middle, we chopped around a bit, we came up near our trigger. We never actually broke it. You could see that our entry is 760.92 and the high of the candle was 760.50. So we're still waiting for a fill. Then we come in, eventually, boom, break our line right there, and then we flush. Okay. So that's a trigger. It's something that could be fully automated and set up the night before. And that's what I do every day. I have triggers that basically do its own thing. Okay. I set them up in the broker and I leave them, and the broker executes the orders for me. So just to show you, in the Discord, I have this section called trade plans. So these are the orders that I put into the broker. I have an entry, a stop loss, and a target. And your stop loss and your target, you can always adjust those, but these are like sample plans that anybody can use to put into their broker. So that's exactly what I did for Tesla. And specifically on this trade, I was able to make, I think, like 1,100 or something dollars. Let me go pull up the P&L. Let me pull up the P&L one sec so I can show you guys. But essentially, what that type of trading is, I like to call it line in the sand. Okay, so we have two line in the sands. You have your long and your short, and you're just waiting for those prices to get breached. If it doesn't do that, you're not interested. And the whole reason behind that concept is you're looking for a breakout. You're looking for a breakout. And with that breakout, it's either going to come near the top of the range, right up here, or near the bottom of the range. And that's what you're playing for. Okay. So I'm trying to find the Tesla here. Can't really find it here. Hmm. I don't find it. I can't find it for some reason. Um, it was in one of my older streams here. I thought I had it saved, but looks like I didn't. But anyways, for these trades here, what I do is I try to go for between a 2 to 4 times risk to reward. So if I'm risking $100 to $200 for these trades, I want to be making anywhere between 400, 800, 1200, somewhere in that range. Because these trades, because they're automated, I can have the ability to just let it go ahead and do its own thing. I don't monitor it. I don't come and do anything. I let it do what it needs to do. At the end of the day, if it didn't hit my target or my stop loss, I always close the position because these trades are not meant for swings. Because sometimes if you take these trades into a swing, you can get in trouble because it could gap against you the next day and you can lose a lot of money. So don't make that mistake. Okay. Hit me with a 9 if that makes sense. All right. Boom. Welcome, my brother, right here. Mark Barron. Welcome to the Trading Wars Army, brother. Thank you very much. Let's go ahead and send Mark a TW Army Spy VIP. Thank you for joining the Army, brother. Appreciate you. So, going back to our strategies, that's probably one of the easiest strategies you can do. They're called nightly triggers. You just put them in the broker, you let them do their thing. So, anybody that wants to get started with those type of trades, I suggest checking out the trade plans in the Discord and starting off with simulation trading with these and see if your broker is good in the sense that you get filled, you don't get slippage. These are things you need to know. I use interactive brokers. I don't have any problems. I've actually had a few problems, but maybe like once every few months I won't get filled on something or they'll miss my target. I've always gotten my stop loss has always been effective. Sometimes I my stop if I have it, let's say at like $10, sometimes they'll get me at like 9.95 and I lose a little bit more than I want to. That's a part of the game. So make sure that your broker can handle that. If they can't handle it, then don't do it because you could lose actually more money because they're not taking targets, they're not honoring your stop loss, you're not getting filled at the right price. All right. So be careful when you do those. I've done maybe close to 1,000 of those trades so far. I have a number in my journals, close to 1,000. All right. So the next thing is the live trades. So live trades. So how do you trade live? So the go-to strategies that we have, I'm going to start off with the easy ones, are the opening range breakout and the fractals. Okay. So let's go to the opening range breakout. I mean, I did a whole seminar on the opening range breakout. It's pretty straightforward by now, but I like to always start off on the 3-minute chart whenever I do an opening range breakout. So let's go back to this Tesla example. So an opening range breakout is when you let the first candle close and you take the break above the high or break below the break below the low for short. So if you go long, you're going to wait for the high to break. If you're going short, you're going to wait for the low to break. That's just a simple old school strategy. The opening range breakout, you need to know when to use it, right? So I use it on the 3, the 5, and the 15. So if you're new to trading, I suggest you zoom out and stay to the 15-minute chart and just focus on that because it's going to give you enough time to let the candles develop so that you don't get overwhelmed. If you're a little bit more advanced, then you can go down to the 3-minute. That's where I like to go. I haven't gone lower than this. I think the candles are a little bit too fast to actually execute. So I stick to the 3-minute and above. And again, you're just waiting for the break above or below to take the trade. And this is really good when we have volatility in the market. So, like SPY, for example, SPY was one we did on Friday. I love to use these when we have gaps, right? So, here was our SPY trade. So, you could see here that we gapped up on Friday. So, we just took the break once it broke the high of the bar and we took that into the close. So, that's what I like to do when I trade SPY or anything that gaps. I love to use the opening range breakout when I know I have volatility. So here's another example. Here's Tesla on Friday. Same trade. There's the 5-minute opening range breakout for a winner. Let's go to the 3-minute. The 3-minute was a beautiful winner as well. And then let's look at the 15. So beautiful as well. So you want to use the orb when you have volatility. It's a good trade in the sense that it's just one trade. It's You take it right at the morning, and if it doesn't work, you get a quick stop loss. If it does work, you could potentially have a runner that goes into the close and you could make a lot of money. That's what happened on Friday. So that's the orb. Hit me with a 4 if that makes sense for the opening range breakout. So we had our nightly triggers, which are basically mainly automated trades. You can still play those nightly triggers live. You can just leave the lines on your chart and then you could look for the price action around those lines. That's what I do a lot in SPY with the Trading Wars Army. Then the next one is your orbs. So your orbs 3, 5, 15-minute chart, you play off of those. You want to use those when there's volatility. So gaps, anything that is like maybe news, FOMC, those type of things are great for orbs because you need to have momentum right away. The next one we have is fractals. So fractals are um, anything that comes up on my indicator, basically. So my Trading Wars, my golden indicator, there's a free version that all of you have, I'm sure. But the patterns that I love to focus on are two of them here. The blue one is the Nirvana, and the yellow one is the Holy Grail. Okay, so the Holy Grail is when we have this golden, basically, the sunlight pours down on us. It's an outside and an inside bar combined, and the Nirvana is the reverse. So the fractals are like hit and run. They're either going to work or they're not going to work. So when you get the signal, it's very similar to the orb where you just take the breakout of the bar and you put the stop loss on the other side. So here's an example of a Nirvana that failed. And then right after that, we got a Holy Grail that was a nice winner into the close. So with these, you and orbs, you want to take a bar by bar approach. You want to take a bar by bar approach. What does that mean? You risk one bar to make multiple bars. And it's like, you have to think about it like it's a hit and go strategy. It's either going to work or it's not going to work. There's no bag holding. It's either it goes right away. It might consolidate a bit, but you're going to know probably within 3 bars if you're going to get stopped out. And if you do get stopped out, that's totally fine. Just get ready to take the next one. Okay. Don't bag hold those plays. And they're really nice because they are more rare patterns, right? So if we go here on the 15, you could see a Holy Grail down here. They're rare, and I like for my traders to focus on rare patterns because then it prevents you from over trading, which is probably one of the worst things you can do. So we can look here on AMD, we could see some Holy Grails. These are all nice winners here. Double inside bar, Nirvanas, a little bit of chop, but at least half of them will give you a good shot. Generally, here's another Holy Grail winner. So if you could have the patience and just wait for those plays I like to look on the 5 and the 15. Those can be a great way to trade as well. Okay. Boom. Dominic Aragon with that 999 super sticker. Thank you so much, my brother. I very much appreciate that. Thank you for the support. All right. So there we go. So those are pretty much, I would say these are the easy ones. Nightly triggers, morning live trades. We have opening range breakout and fractals. So that's the first part of this lesson. So hit me with a 5 if that makes sense. All right. And make sure you have the indicators added to your charts because it's going to help you to see the patterns. It's going to help you to see them when they show up, and it makes trading a lot easier. That's why I decided to give them for free, because I wanted to make sure that I'm giving you guys value, so that you can actually see it and back test it and make sure it works for you. All right, now we come into probably the most complicated but the most profitable strategy, which is the Fibonacci. And that's just the way trading is. The harder strategies, the ones that involve you having to like draw things in real time, is always going to be the ones that make the most money. Not always, but what I mean is that the fib is designed to make you the most money because you're buying a pullback. Okay, so let me just differentiate between the strategies here. So when you're taking an opening range breakout, you're taking the breakout of the bar. And by default, by taking the breakout of a bar, you're getting in on a worse place than you could be, because you're getting in after the bar has developed. Okay, so that is orbs as well as fractals. So even though they're great trades, you're taking the bar when it breaks. And because of that, you're getting in a little bit later to the party. Sometimes that's good, sometimes it's bad. Sometimes it's good because you get a confirmation, you get a bar that shows you the direction that it wants to go into. But sometimes, because you get late to the party, especially when you're trading options, you end up worse off. Okay, not all the time, but I'm just saying if you were to take the same trade using a Fibonacci, you would make more money because with Fibonacci, it's blind. You're buying as it's coming to you. So you're buying dips and you're selling rips, and that's always going to make you the most money. It might not always be the most accurate, but in terms of money, it's always going to make you the most money, especially with options. All right. So let me just make sure you guys understand that. So all of these strategies from my trading and from my testing, especially the ones that I call out in the rooms, are profitable. I know they're profitable because I trade them. Okay. You just need to know when and how to use them. And that's what I'm trying to explain. But when we go to Fibonacci now, it's a totally different ballgame. But let's just make sure we're all good here. Hit me with a 10 if you're ready. Then we'll talk more about the fibs. So I wanted to lay out the easy ones: triggers, orbs, fractals. And now the fib is almost like a prediction. It's like you're predicting where things are going to turn before they get there. Okay. All right. So let's use AMD as an example here. This is a great example right here. We could do that. Okay. So I'm just pulling this up from Friday. Let's walk this through. So the first thing is, let me just go ahead and show you this. I have two Fibonacci rooms. I have one in the stock room and I have one in the SPY room. And the purpose of these rooms are to draw the Fibonacci in real time, because obviously you all know this. It looks great in hindsight, right? It looks great in hindsight. But that's why I have the rooms, so I can draw them live and you can see the plans. We draw the golden zones and all that. So let's look at AMD. So let me walk you through this. Okay. All right. So there's always going to be 3 legs of Fibonacci minimum in a day. 3 legs. All right. So we could write them down here. The first leg is always going to be the morning leg. And that's probably between the first 15 to 30 minutes. Okay. Then we have the afternoon leg. And this is around lunchtime. And we also have the opposing leg. Okay. If you can master these 3 legs, you're going to be good to go. There's one more, which is called the previous day's range. Okay. All right. Here we go. Boom. Nandi with the 499 super sticker. Thank you, my brother. Very much appreciated. Okay. So let's start off with the morning leg. So the morning leg is essentially the first move of the day. The first move. Okay. So generally, the stock is either going to go up or it's going to go down. That's it. Sometimes it'll go sideways, but within the first half an hour, you're going to see a clear move, either down or up. So in this case with AMD, we can clearly see that we had a push down. So what you do when that happens, and remember, we draw these live, is you always take your, so let me hit the replay. So I'll walk you through it. So let's start from the first bar. Okay. So we start off, we have a big bar, we have an inside bar, and we break. So once this low breaks here, that's telling me now we could start drawing our legs. Okay. So I take the Fibonacci from the high and I bring it down to the low. So if we go lower, all I do is I just move it to the anchor. So I just keep moving it. If we go lower, I move it lower. And where we're looking at is always going to be the golden zone, which is between the 50 to the 786. That's the golden zone. So Fibonacci is a form of trend continuation. So if the first move is a push down, when we come back up, we're saying we're looking for that move to continue again down. We're following the first push of the day. Okay. So we come up here. Okay. So in this case, we went lower. So I put it lower. So this is good because I'm showing you in real time how I make the analysis. So now we start pushing back up. Okay, so now I'm watching. Here is our golden zone. There's our 50. So notice as soon as we come into the 50 here, we start to get rejection. So personally, where I like to play off of is I don't like to play the 50 as much. I like to play the 618 and the 786 as well as the 90. So I like to extend it a little bit up here. Okay. So this is the area where I look to short. So, but the true golden zone is from the 50. Okay. So for me, I like to I want to make sure I'm getting a good deal. So I always wait until it comes up higher. So when you get up here, guys, what you can do is you can have limit orders that are waiting to short, or you can wait for candlestick confirmations, right? And what you do is you always put your stop loss at the swing high. Here's the swing high. So that's where your maximum risk will always be. All right. And so you can see we come into the 786 here. We have this little inverted hammer slash doji. And you could see we started seeing rejection all the way through here. Okay. All the way through here, we start seeing rejection and we start to pop back down. Okay. So there, that's your goal right there. So this move, so when you get in on the fibs, you want to take it back down to the next fib. So these fibs down here are targets. People always ask me like, oh, why do you have so much fibs? These are targets. So when you're shorting up here, you literally can just take it down, target to target to target. So you have a clear path. It's very straightforward. You just get in, your targets are all the way down. Okay. Okay. So that's the morning leg. So hit me with a 5 if that makes sense. And a lot of the times you're going to get good reactions like this. Sometimes you're going to get the home run trade where you just drop all the way down. And the key is you want to, and for the people that are in the SPY room with me, the key is always this. Take some profits, move the stop loss up. Repeat. Take some profits, move the stop loss up. That's all you can do. If it wants to become a big play, then you gave it the chance. But what you can't do is let a winner become a loser. So if you're all the way down here and you're making money and you don't want to take any profits and then it comes back all the way up and stops you out, that's on you. All right. So always make sure that you're willing to take some profit. So now the second leg that we have here, guys, is the opposing leg. So anytime that one fib trades, so this is the short fib, the other fib will be ready. So in this case, we have the long. So if I take it from the low to the high here, same thing, golden zone, 50 to 786. Now the bull is going to try. So there's always going to be a battle. That's why it's trading war. Okay. That's why we call trading wars, because the bear is making money, but the bull is going to want to try to defend that as well. And you can see right here, we step in the 618, we start to pop. You have a nice little inside bar confirmation right there. Let me fast forward. Boom. And that's all she wrote. Okay. So that's pretty clean right there. So there's your opposing. And then the afternoon leg is when you're looking at the bigger range. So by lunchtime, which is around 12 o'clock here, you have an established low and you have an established high, which is right there. And then you could see in the afternoon, it's no surprise where we land. We land right back on the 618. We put in an outside bar, takes us straight into the close. Okay. Very clean, very clean. So those are the fibs in a nutshell. I could spend another hour talking about it, but let's leave that for another day. We're already 23 minutes in here. And there we go, guys. Those are effective, simple trading strategies that I use for stocks every single day. I take a lot of trades that are automated and a lot of trades that are live, but the automated trades, I just feel like that balance of having some automatic and some that it's in like live trading really helps my mental, because sometimes I'm not the best trader live trading and sometimes the automation is not working. But when you have a good balance, that's when you can really make the most money. Okay. All right, so there we go with my friends. I hope you learned something. As always, look, everything that I talked about there and more could be found at tradingwars.com. In my books, guys, every single one of my books has at least 50 charts that have markups. So this is the fib one. Here's the SPY one. Here's the table of contents, some videos for you. Check it out, guys, if you enjoyed it and if you learned something. Grab a copy of the book and you can trade with us live tomorrow in the rooms, or you can sign up here directly. So I hope that added some value for you. Looking forward to making some green tomorrow. Last week, we didn't have any losers at all on SPY. I wonder if we could do it again. I'm going to be trying my best and directing everybody tomorrow. All right. Thank you very much, my friends. Let's answer this, brothers. Could you explain how you risk 1 to 200 but are seeking 200 to 400 gains, placed specifically when using shares? So you need to use this tool right here. So here's an example of a tool. So let's say you want to get long on this outside bar. Okay, so let's say that and get rid of that red. And let's just say you put your stop loss here. So this tool right here, once you put in your risk, so let's say you want to risk $100. Okay, then it's telling me right here I have to buy 212 shares if I get stopped out. Okay, so if I enter here and my stop is here, I have to buy 212 shares. So if I get stopped out, I'm going to lose 100. But when this number here says 2, on the risk to reward ratio right there. So like right around when this is 2, that's going to be $200 in profits. All right. So I hope that makes sense. I have a lot of videos on that. So check out the channel. All right. Let's do some scans then. So we have some friends asking. So I'm about to post some pics right after this, but I already ran some scans on Trendspider, and a few that are standing out to me right now are Apple. If we go to the weekly, powerful inside bar right there. AMD, nice, same kind of pattern there. Pen, this one is a Nirvana, and I have 4 more that I'm going to post right after the stream on the Twitter. So make sure you follow Twitter there. Also, shout out to the Trading Wars Army. I sent out the newsletter for anyone that joined the Army. Really appreciate you guys, and I hope this adds value to you. As always, guys, make sure to leave a comment so you have a chance to win the giveaway on Sundays. Angie, 199. Thanks for all you do. Thank you very much. Appreciate you guys. All right. Good luck, and I'll see you here tomorrow.